You think your bank account is your money. That's the comforting assumption the system depends on. Because in the real world, your bank balance is not cash. It's a promise. A promise that only works when everyone stays calm. But what happens when calm disappears? This video exposes the silent mechanism that can lock your savings overnight, without a crash, without headlines, without warning. Not a bank robbery, not a recession, a financial switch. And once you see it, you'll understand why the next crisis won't look like 2008. It will look like normal life until your card declines. Picture this: a normal morning. Coffee. Commute. You tap your phone to pay. Declined. You try again. Declined. You open your banking app. Temporary restrictions. Your employer paid you yesterday. Your balance is there, but you can't move it. And the scariest part, everyone around you is still shopping like nothing happened. Because it's not a collapse yet, it's a containment. This is the modern bank run. Silent, digital, controlled. And the mechanism that makes it possible is hiding in plain sight. Layer 1 is the liquidity illusion. Banks don't hold your deposits in a vault. They lend them. They invest them. They transform them into long-term assets. That's how they profit. But that also means one thing. If depositors demand their money back at the same time, the bank doesn't have it. So the entire system runs on one fragile belief: that you won't all withdraw at once. Now add the modern trigger: interest rates. When rates rise fast, the market value of long-term bonds falls hard. Many banks hold large bond portfolios because they're safe on paper. But when rates spike, those bonds become losses on paper. Unrealized losses. And unrealized losses are like a crack in the foundation. No one panics until they see it. Then everyone runs at the same time. This is how a normal bank becomes unstable without making a single bad loan. And the public doesn't see it because the losses are hidden inside accounting language. Now layer 2, the speed problem. In 2008, bank runs were physical. Lines outside branches. News cameras. Time. Today, a bank run is an app. Millions of withdrawals can happen in hours. One viral headline. One influential tweet. One rumor. And suddenly, the entire institution is forced to sell assets at a loss to meet withdrawals. This is the death spiral. Withdrawals force sales. Sales realize losses. Losses create fear. Fear accelerates withdrawals. A crisis can form before regulators even wake up. Now here's the point where most people relax. They say, "My deposits are insured." That's where the trap tightens. Here's the twist. Deposit insurance is not a magic shield. It's a small fund attached to a massive system. It was designed for isolated failures, not systemic events. If one bank fails, insurance can cover it. If multiple major institutions fail together, the fund is mathematically overwhelmed. In a true cascade, the system doesn't have the cash to cover every promise at the same time. So what happens? Governments don't save everyone. They stabilize the system. And stabilizing the system often means one brutal move: restricting withdrawals, limits, delays, controls, not to punish you, to stop the fire from spreading. This is why the next crisis won't look like a dramatic collapse. It will look like temporary measures, and the language will sound harmless. protection, stability, security, anti-fraud. But the result is the same. You can't access your own money when you need it most. Now, the double twist. The real betrayal is that insiders prepare for this. When stress rises, institutions quietly protect themselves first. They secure emergency lines. They reposition liquidity. They change internal rules. They harden terms. And while the public is distracted by inflation and politics, the financial system is building the infrastructure for controlled containment. This is the new operating model. Not panic, managed panic. Not collapse, controlled access. Because the system learned the most important lesson of 2008. Confidence is everything. So now the goal is not to prevent failure. It's to prevent visible failure. A system can be unstable and still appear calm if access is controlled. Now, the final reveal. If a cashless world becomes standard, the financial switch becomes easier to use. When payments are digital, restrictions are instant. When money is programmable, restrictions are targeted. Limits can be applied to individuals, categories, regions, or time windows. A bank run is no longer solved by calm. It's solved by code. And that's why you must stop thinking like a customer and start thinking like a risk manager. So what do you do? Here is the 5-step protocol to protect yourself without paranoia, without conspiracy fantasies, and without relying on luck. Step 1. Never treat one bank as a vault. Treat it as a service. If you have savings above the insured limit, spread it across institutions. Not because you're scared, because concentration is risk. Step 2. Know what your bank actually is. Some banks are conservative lenders. Some are asset-heavy. Some chase yield. You don't need insider data. You need one principle. If a bank depends on long-term assets funded by short-term deposits, it is structurally vulnerable in high-rate environments. Step 3. Build a real liquidity buffer outside the app. A 6-month living reserve that is not trapped behind one institution's controls. Short-term government bills. Multiple access points. Cash for immediate needs if you choose. Not extreme. Just functional. Step 4. Watch the early signals. It's not headlines. It's behavior. Sudden changes in withdrawal policies. Aggressive retention offers. Quiet fee changes. Temporary transfer delays. Unusual customer service scripts. These are the smoke signals of stress. Step 5. Diversify the rails. Don't keep 100% of your financial life inside one network. Multiple banks. Multiple payment methods. Multiple pathways to move value. Because in the next crisis, the winners won't be the richest. They'll be the most mobile. This is the reality. You're not living in an era where money fails. You're living in an era where access can fail. And the difference matters. Because a system can survive while citizens are locked out. That's the silent danger nobody explains on the news. Now you know. And if you want the next investigation, subscribe to the Hidden Wealth File. We don't react after the damage is done. We expose the switches before they get used.